Stop letting clickbait tell you Ottawa's real estate market is about to collapse. It's lazy, it gets views, and it scares good buyers into making bad decisions. January was a steady month in Ottawa real estate. Rates held, activity kept moving. We're seeing a market where strategy matters more than hype. I'm also seeing something in real life that you won't catch in most headlines. First refusals are back in full force. I personally saw 3 accepted this month. That tells you buyers and sellers are both getting a lot more tactical. Hey, I'm Eric Beckers, a realtor here in Ottawa. If we haven't met, I help first-time buyers, upsizing families, and investors make smart moves in this market without getting pushed around. If you want monthly Ottawa stats that are actually useful, hit like, subscribe to the channel, and let's dive in. Here's what we're going to talk about today. I'm going to walk you through what happened in Ottawa in January. Sales, prices, inventory, but more importantly, what that actually means for buyers and sellers. Then we'll talk rates. I'll explain a little bit about fixed versus variable in plain language. And then we'll move on to hit the bigger Canada-wide stuff that matters to Ottawa. Housing starts, the renewal wave, the mortgage arrears reality that nobody actually wants to admit. And last, I'll give you my February outlook and exactly what I'd do depending on whether you're buying, selling, upsizing, or a first-time buyer. So let's begin. What happened in Ottawa in January? In January, Ottawa saw 610 residential sales. This was down 5.6% compared to January last year. New listings came in at 1,522, which is up 8.8% year over year. Active listings are up 22% year over year. Months of inventory sitting at 4.4%. So if sales are down, inventory is up. What does this mean? Let's pause right there because this is where people are getting fooled. When you hear inventory is up, the real question is, up compared to what? Compared to last year? Compared to the last few spring markets? Compared to what's normal for Ottawa? The point is, buyers had more choice in January than they've had in quite a while. And that changes the entire feel of the market. 4.4 months of inventory puts us in that balanced-ish zone where it's not a frenzy, but it's not dead either. You can feel that in real life. The right homes priced properly, they move quickly. But the days of list it and it sells itself no matter what, that's not back. So let's talk prices, because this is the part that everyone actually cares about. The average sale price in January was $641,000, which was actually down 4.5% since last January. The median price of $615,000 was down 0.9% year over year. And that median number matters because it often reflects the market a little bit more cleanly than the average, which can be skewed by one extremely large sale. Average can swing based on what type of home sold that month, whereas medium helps you see where the typical deal is happening. Here's another stat that tells you this is not a chaos market right now. The sale to list price ratio in January was 97.4%. So on average, homes were selling for 97.4% of their list price. Not 110, not 105. It's a market where pricing and negotiation truly matter again. Days on market tells the same story. Median days on market was 49 days in January compared to 42 this time last year. So things are taking slightly longer. Buyers are taking their time. Sellers need to set realistic expectations. Now, this doesn't mean every home is sitting. It means buyers are selective. The best homes, they still move fast. The ones that are overpriced, not staged, not prepared, or just feel like, let's try a big number and see what happens, those sit. And the longer they sit, the more they get negotiated once they finally get an offer. This ties directly into what I'm seeing on the ground. First refusals. If you're newer to real estate, a first refusal is basically most often when a buyer comes in with an offer, the seller accepts it with a clause that allows them to keep marketing the home. If they get another offer during this period, the first buyer has a window, 24 to 48 hours, to remove the conditions and firm up, or else they lose it. The most common time that this condition is used is for the buyer to sell their own property. I personally saw 3 first refusals accepted this month with another offer active right now that includes one. That's not nothing. That's a sign we're in a market where sellers want to protect price, but buyers need to protect their conditions with the longer days on market. It's that push and pull you get in a more balanced market. So here's a question. If you're buying and you found the right home and a seller wanted the first refusal, would you be comfortable with that condition and that pressure? Would you be ready to firm up quickly if needed? Or would you rather stick to homes where you can hold your conditions for a long period of time without that added stress. As a seller, this is something you need to consider as well, and you need to plan for these kind of offers ahead of time. Let's move into the rates, because rates held steady this month, and you need to understand what steady means. Variable rates are what's tied to the Bank of Canada. Fixed rates are actually tied more closely to the bond yields, especially the Government of Canada 5-year bond, and what lenders actually think is coming next. So when people say rates didn't change, you still have to ask, are we talking variable or fixed? Because fixed can move even when the Bank of Canada holds. Variable only moves when the bank moves. However, the fixed rates are adjusting daily. Right now, we're in a period where the Bank of Canada is holding steady, and the bond market is doing its own thing based on inflation expectations, economic data, and what investors think the next moves will be. This is why one week your buddy gets quoted one thing, and the next week someone else gets a slightly different fixed rate, even though headlines didn't change and we all hear that the Bank of Canada held steady. So I'll say this, buyers don't need perfect rates. They need predictable rates. When rates stop whipping around, buyers can plan again. And when buyers can plan, the market functions better. Now, I want to address the big fear narrative that's all over social media and the news right now. Everyone is going to lose their house. Interest rates are jumping up from people who had 1%, now they'll be at 5%. That's not what the data says. Yes, mortgage rates will be jumping up for those who bought in 2021. Mortgage arrears in Canada are still historically low. Yes, the mortgage renewal wave is real. And yes, some households are strained. But the idea that everyone's about to get wiped out is clickbait, designed to scare you. And it's not supported by the actual arrears numbers. And now this is where Ottawa becomes extremely important. Ottawa has always been a more stable market than a lot of Canadian cities because the employment base here, government, healthcare, education, tech, a steady flow of renters and buyers tied to those sectors. Now you might be thinking the government's laying off, but even with government layoffs making headlines, Ottawa tends to absorb shocks better than boom and bust cities. Even if you're getting laid off, there's a long runway of financial freedom before you feel the true effects of a government layoff. This is why Ottawa is often considered a boring market. Boring is good when you're investing long-term in real estate. Now let's shift the focus to supply. This is the part that explains why Ottawa doesn't just crash on command. When we don't build enough housing, prices don't collapse easily. They might soften, they might flatten, some segments dip, but without a true flood of supply, you don't get the wipeout that the internet keeps promising. This is why January's inventory increase is important, because it gave buyers more options, but it's still not a sign of some massive oversupply. So what does this mean, depending on who you are? If you're a buyer, January showed you a theme for 2026 so far. Opportunity exists, but you need a plan. You can negotiate again in many cases. You can bring conditions, you can take a breath, but you still have to respect the good homes, the ones that are priced properly and show well. Those can still move quickly, and first refusals make that even more true. So ask yourself this, are you the kind of buyer who needs time to think, or are you ready to act when the right home hits? If you need time, we should be targeting listings that have been sitting longer, where the seller is more likely to work with you. If you're ready to act and truly prepared, we can hunt for the best homes and still compete smart. Not reckless, but smart. If you're a seller, January proves something important. You can still get strong results, but you have to earn them. The days of list it and it sells itself are not back and won't be for a long time. Preparation matters, pricing matters, photos matter. The first week on market is crucial. And if you want to sell in the spring market, the winners are the ones who are getting ahead of it now, not the ones who wait until the last second to list. If you're an upsizer, this is the most important part of the whole video. You're playing two markets with 4.4 months of inventory and 2,600 active listings. Buyers have more choice, and that can slow down your sale if you overprice. This also means you have more options on the buying side. The key is sequencing and planning. Sell first, buy first, bridge, longer closing, right conditions, so you're not getting forced into a panic decision. You can watch our video on whether buying first or selling first makes sense for you. So, what am I predicting for February and early spring in Ottawa? Here's my honest take. I think Ottawa stays steady. I think buyers continue to re-enter as they accept that rates are not going to be dropping. I think spring competition returns in specific lanes, especially family homes in good school zones and well finished properties that feel move in ready. I think overpriced listings will keep sitting. I think we'll continue to see more tactical deal structures such as first refusals and sellers trying to protect price with buyers trying to protect their conditions. So if you're watching this and trying to decide what to do, here's what I want you to do next. If you're buying, ask yourself, do I want to win a home or do I want to win the right home at the right numbers? Those are not always the same thing. If you want to buy this spring, get pre-approved now. Get your down payment plan tight and know your comfortable payment, not just your maximum approval. If you're selling, ask yourself, is my home going to look like the best option online the day it hits the market? Because buyers decide before they show up to your property. And in spring, you don't get a check and sand. And in spring, you don't get a second chance at a first week. If you're upsizing, ask yourself, do I have a real plan for selling and buying without being forced into a bad decision? Because that's the game. If you want help building that plan, I offer a free, no pressure consultation. We'll go through your numbers, your timeline, what the market looks like in the exact areas you care about in Ottawa. Now, I want you to leave a comment because I actually read through every one. What are you planning to do this spring? You buying, selling, upsizing, sitting tight? If you're sitting tight, what's the real reason? Hit that like button, subscribe, and I'll see you in the next video. Till next time, happy house hunting.